Hi, everybody, and welcome back to FANG Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol and Associates Asset Management. Interestingly enough, the FANG stocks have kind of settled into four distinct modalities, two stocks in each one. Two may be on the verge of a very promising signal, pointing to much higher prices ahead. Two have already flashed that very promising signal and are steaming solidly up. Two are sort of mushing along. They're safe enough, but not exciting. And two look to be heading lower as their SVA technicals look to be aligning with their visible fundamentals. So, there's something for everyone. Anyway, let's not waste any time. Without any further ado, I really need to take a close look at those FANGs and what went on in the past week. But, as always, before I do like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. Okay, let's start with Meta, which had just a spectacular quarter. As you remember last weekend, it leapt to its bubble price. And there it has stalled. And I wonder why. Well, let's take a longer look at Meta, and I think you will see very clearly. Every time in the past 10 years that Meta has reached its bubble price, which is 7.4 times book value, it is stalled out. Sometimes very sharply, sometimes it's taken its time. Well, we're here again, and as you just saw, we've just been moving sideways. Now, this is not to say that it can't break out and run. I'm just saying that the market has a memory. And the memory is that at the bubble price, that's it. So it's going to take some doing to go ahead. However, we're not going to turn our backs on it. Microsoft, well, actually kind of like Meta, although perhaps not so dramatic, has moved up slowly to its HB2 price, which is 12 times book value. Now, it hasn't been able to break out so far, as you can see. And among other things, of course, you can also see that the fair market value has just been slowly moving up, pretty much, by the way, as the company promised. So here we are. We have two stocks that could be on the verge of a breakout, which, if they were able to do that, would promise at least that the prices could move one breakpoint higher. So watch Microsoft as well. NVIDIA, lovely stock action so far, has broken out nicely over its HB6, which is a very, very long-term high, although the stock did get to its HB7 months before. That's 42 times book value. It looks like it's breaking out again. Well, $819, $820 for nearly $700. That's looking like a nice little gain ahead. And of course, Netflix, which, well, remember that they had a spectacular quarter 2 quarters ago, and we kind of wondered what would happen this time, but we thought that there was going to be another good quarter, and there was, and the stock leapt over that break point. No time to buy the stock. You had to be there in anticipation that it would happen. And if you remember, we were. Now, two stocks that are what I would just call kind of mushing along. And the first one is Amazon. Amazon came in with some nice numbers, nice promising numbers, and that fair market value has picked up nicely. It would look very much to me as if that stock wants to get to its HB1, which would be 9.5 times book value, up from its bubble price of 7.4. We'll just hang in there. The numbers are nice. The action is promising. Alphabet, they reported some numbers which I think people took two ways. Some people thought they were disappointing. I personally thought that they looked pretty good to me. The stock set back, but subsequent to that time has been just sort of edging higher, and even today, in a nice day, has been moving along higher. I think the bubble price, 7.4 times book value, is a promise. Now, two stocks which are disappointing. The first one is Apple. And look at the fair market value. It's been just drifting along, and the stock indeed has broken down below its HB6 price. So that is a sell signal in our lexicon. Now, what is peculiar about Apple is that it hasn't been earnings and sales that has been driving the stock for some period of time, as you can see from the flat, almost flat fair market value. It's been stock buybacks. And this time around, and indeed the last time around, the company did not buy back stocks. So the structural prices continue to rise, and as a consequence, then we have got that breakdown, and we've got a sell signal on the stock. Finally, Tesla. Well, you remember a couple of weeks ago, Tesla was right on the verge of its HB2 price. That's 12 times book value. Broke down, and I said, we need the confirmation there. Well, we got it. Well, we barely got the confirmation in the stock drift, and then suddenly we got another sell signal. So two sell signals in a row from Tesla. I think I would be very careful about this company before I thought of re-entering it. Now to summarize, things have broken down into four general categories. First are those that you really need to pay close attention to. Those that are flying high, those that are steady as she goes, and those that I would prefer to leave to someone else. Let's start with the two that I hope you are watching stocks. Last week, Meta got everybody going with blockbuster numbers on a year-over-year basis, and the shares leapt to my long-term target. Its bubble price, or 7.4 times book, which I had set over a year ago. We now have the refreshed bubble price in our database, and it's fascinating to watch the shares as they try to decide whether they should break out or stall out. Thus far, indecision has won the day. The bubble price is a very important hurdle, as the shares have never been able to exceed that level. As I noted last week, the market has a memory, and it does not casually allow prices to head into the wild blue just for the heck of it. As for Microsoft, you can take the stock on any number of levels. Some year-over-year and quarter-over-quarter comparisons were powerful and promising. Some were just, in other words, just what management had been saying all the way along. As a result, that HB2, 12 times book, remains a tough hurdle to surmount, but watch carefully. The bottom line here is that Meta, along with Microsoft, are the two FANGs that you should keep a daily watch over, as breakouts here would be significant. And speaking of breakouts, both Netflix a little while ago and Nvidia more recently, have broken out over critical breakpoints and are doing very well indeed. Breakouts are lovely signals as they do two things. First, they alert you to the probability that the growth rate of the underlying company is accelerating. Second, they promise, as it were, the strong likelihood that the share price will advance at least to the next higher breakpoint. As that is normally at least 22% and could be more, this tends to be very promising and a profitable market cue. On a more prosaic note, two of the FANGs are on a steady-as-she-goes course. I've been looking for something good from Amazon, and we got it. The shares have been oozing higher, and it looks like the HB1, or 9.5 times book, is in the cards. Maybe more, of course, but let's see what happens at the next breakpoint. Some investors thought that Alphabet had disappointed, but you'll recall that I said that I thought that the numbers were okay. It's just that the market wanted more. So the stock set back a bit towards its MSG price, that's 5.5 times book. But this week, things appear to have come more into line with my own analytical thinking, and the shares are rallying towards their bubble price. Again, that's 7.4 times book. Well, that's 6 of the 8 FANGs, which are looking pretty good. Although I emphasize Meta and Microsoft must break out here. However, into every life, a little rain must fall. Apple and Tesla continue to be a major concern because of both their shorter and longer-term potential growth outlook. Apple has shown almost no growth at all for 7 quarters now, I believe. Well, I remind you again that it isn't necessarily sales and earnings that drive Apple, but share buybacks. But ouch, there have been no buybacks. And therefore, we are now looking, right here now, at a breakdown below the HB5, or 26 times book. The real mystery to me is how the shares have hung in so long with the indifferent results that they have had. As far as Tesla is concerned, I've been saying that the electric vehicle market is looking a whole lot like the mid-1920s when everybody and his brother decided to start building gas-powered automobiles, which led to a catastrophic consolidation in the industry. Now, 3 weeks ago, Tesla was right on the verge of providing a clear sell signal, and since then, it has now offered a second one as well. The last one is a typical breakdown pullback kind of signal. Overall, the performance of the FANGs is kind of broadening out, and you need to be increasingly aware of some specific risks and, of course, opportunities within the group. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and the senior portfolio manager at McNichol & Associates Asset Management.